everybody, welcome to Business 101. The first thing we're going to talk about is GDP. GDP stands for Gross Domestic Product. It is the total volume of goods and services in a country for a year. GDP includes customer spending, government spending, net export, and investment. If you increase one of these four, you will increase GDP. Also, GDP is measured in standard of living and quality of life. So you can also increase standard of living or quality of life to increase GDP. How can you increase standard of living or quality of life? It's so easy. When citizens get a job, they will have income. Then they have financial resources to spend on their expenses, which is called customer spending. As long as the people are employed, the standard of living will go up eventually. The same thing with quality of life. People have jobs, so they are not stressed out about their life. They have income to pay for healthcare and healthy food, which lead to increase of life expectancy. Life expectancy increases quality of life and also the GDP. The next thing we're going to talk about is business. Business is any activities that exchange goods and services in effort to earn profit. One person's spending is another person's income. For example, if I want to buy a pencil from you, I give you $2 and then you give me the pencil. Business drives the economy. Business improves people's standard of living and increases the quality of life by providing jobs with wages, and then paycheck provides stability that helps workers stress-free. Another important thing in business is communication skills. It's really important when you meet somebody, you shake their hand like this. Not too weak, but not too hard. Remember to set your real voice in the voicemail because it identifies who you are. Also, remember if you write a letter to somebody, make sure it's concisely but professional. Then also use business blog format. If you want to open a business in the future, I encourage you to study accounting. Accounting is the process of keeping track of a business finances. Accounting includes logging financial transactions, running reports based on transactions, and interpreting the reports to understand a company's worth. All businesses are required to follow GAAP rules for accounting. GAAP stands for Generally Accepted Accounting Principles. A business needs to properly report and pay the following: local tax, state tax, federal tax, taxes withheld from employees' paychecks. Accounting relates to a transaction. A transaction is any event or activity that can measure in terms of money. Every transaction that occurs in business should be recorded in order to keep accurate records. Do you know that every transaction relates to an account? Each account that is used to record or summarize transactions can be classified as assets, liability, or owner's equity. To find out the value of the company, you take assets minus liability equal owner equity. So assets is what the company has, and liability is what the company owes, and owner's equity is the company value. Also, for assets, if you have debit is up and credit is down, you have the normal balance is debit, and liability, if you have debit is down and credit is up, the normal balance gonna be credit. Debits are good and credits are bad. Always remember that.